Hello, everyone, and welcome to another informative episode of the Florida Business Forum podcast. Let's open the Florida Business Forum floodgates and let the information begin to flow. Here's your Florida Business Forum information guru and anchorman, Sam Yates. A little bit of something different today. We sometimes find a topic of interest that is multi-podcast usable. And if you try to decipher that down, all it means is that we have a topic that can be of interest to the Florida Business Forum, our various builders associations, our senior community, and generally information that is across the board super useful for people. And today is such as that topic. So I'd like for you to join me in welcoming Ed Peace. He is the finance and loan analyst, lender, and partner in the activities branch of the U.S. Department of Agriculture, and specifically, and this is a mouthful, the Single Family Housing Guarantee Loan Program under the rural development arena. So, Ed, that's a lot to say, and it means that you're very important. So I am happy to have you on the program today.
Thank you so much, Sam. Glad to be here and glad to share our information as always.
Well, let's start with what your job is and the geographic area that you cover.
Yes, so my job specifically is to train lenders, builders, and realtors on our programs. We serve, since I'm in the national office, we actually serve the whole country, every state and territory. And geographically speaking as well, the any area that's less than 35,000 in population is considered rural for our rural housing programs.
And I think that the program itself is rather unique. I'd never heard of it before. So tell us about the program itself.
Yeah, we don't have an advertising budget, so that's left up to people like me to get the word out. So yeah, we think it's an impressive program too. So especially when you get all of these features with a no down payment requirement. That's the key for the applicants. We can even have most of the loan closing costs or all the loan closing costs rolled into the loan up to the appraised value. So specifically with the single close construction loan, one of our USDA approved guaranteed lenders underwrites and closes the loan, but immediately after the loan closing, they can request our loan note guarantee, which is the government backing for that loan, before construction even begins. So that's kind of unique to this program. There are other one-time close programs out there under other entities, but nobody that I'm aware of issues their government backing up front. So, and just a little bit more in detail, the construction draws are made as the house progresses. And this loan feature was designed to allow for reserves for the applicant to establish from loan funds a payment reserve so that they're not having to make rent payment and either the accrued interest payment or the full house payment during construction. So, and neither does the applicant have to, secure a construction loan and pay closing costs on that loan and then turn around and secure permanent financing and close on that loan and pay all those loan closing costs as well. So this all-in-one construction to permanent loan saves everybody time and money.
It has to be popular. I'm hearing this and I'm going, wow. I know people that would love to take part in that. Safe to say it's very popular?
It is. It's gaining popularity. Absolutely.
What about, and I did not see this in the information that I reviewed, is there a there obviously has to be a maximum, or is there a maximum that can apply for the program?
Maximum
loan amount.
Regarding loan amount, basically what the applicant qualifies for. So we do have income limits that we'll talk about a little bit later on.
Sure.
So they're under those income limits and they qualify for the loan. There's no set dollar amount for the loan limit. We used to have those, but we kind of took that off and said, hey, if the applicant is under the income limits and they can afford the loan, they can buy the house.
Has this program been around a while, or is it brand new?
So a little bit of background. The USDA has been doing housing loans since 1949. Congress established our ability to do so by the Housing Act of 1949. And then so we were doing what we call direct loans, where the agency does all the originating, processing, underwriting, loan closing, loan servicing for households that are 80% of median income or below. That's our direct program. Those loans are subsidized. Payments are subsidized in that program. In 1991, Congress expanded that program or expanded our ability to go for higher income households. So now our guaranteed loans serve 115% households of 115% of median income for the area. And then, so just 4 or 5 years ago, we added this single close construction loan feature. So it's only been around 4 or 5 years.
I think the first time I heard of it was, well, as a matter of fact, when you reached out, I had just heard about it. And I was like, this has to be something that the building community, our builders, are going to be very interested in, lenders and realtors. And
Absolutely.
realtor, for just an aside on that, because I know realtors are a little bit stymied right now in affordable housing. This opens a new venue for them. And my understanding is if you are a realtor and you're working with someone, you don't wait until everything is finished and done. Realtors get paid early.
That's right. So at the initial loan closing, which would typically be, the construction loan, that's when realtors get their commission. So they don't have to wait till the permanent loan is closed, or even don't even have to wait till the house is finished. If they can hold the hand of the applicant if they choose to, through the construction process. But if they choose to cut ties and go gather some more, fishing for more applicants, qualified applicants, then they can certainly do that as well. So
I want to go into the details and talk about how people qualify in particular and some of the highlights of it. But before I forget, I know that as we go through this, there are going to be builders, realtors, lenders, and the general public that goes, wow, how do I get more information? How do they do that?
Yes. So applicants really should contact the USDA approved lender of their choice. And I can give the website a little bit later on.
Sure.
But lenders, builders, and realtors may certainly contact my particular loan division. It's an email address that's SFH, that stands for Single Family Housing, GLD, that stands for Guaranteed Loan Division. So it's sfhgld.lenderpartner@usda.gov. We can help them.
Absolutely. I would advise the folks who are monitoring that to stand by, because I can tell you it will get busy. Let's walk through the program from the potential buyer, from the person that is going to look at this and say, can I qualify? How do I qualify? Walk us through some of those bullet points.
Yeah, so USDA, all of our housing programs are driven by maximum household incomes. So we have income limits, and it sounds like it may be very limiting, but I mentioned a while ago we serve households of 115% of median income, but the least maximum income limit, if that makes sense, the lowest maximum income limit anywhere in the nation is $110,000. For a family of 1 to 4 people in the household. If it's a household of 5 and above, that lowest maximum is $146,000 for the household. So I've heard it said that 4 out of 5 households in the U.S. meet our income limits based on the most recent census data. So even though it sounds restrictive, it's not very restrictive at all from the applicant standpoint. So and the applicants would have to be unable to qualify for conventional credit, since we're not competing against conventional lenders. They have to have acceptable credit histories. We don't specify a credit score, a minimum credit score. That's up to our underwriting lenders to make prudent loan decisions. They have to show repayment ability for that proposed loan. We do that by looking at a percentage of their repayment income that would take to make the house payment, typically 29% or less of that repayment income. Then if you look at all their debts on a monthly basis, that typically can't go over 41% of their repayment income. We can go a little bit above that with compensating factors if there's stronger If there are more strengths in the file than there are any weaknesses, we can possibly go above those ratios there. And they have to be a U.S. citizen or qualified alien. Our handbook spells out the details on that. And lastly, the properties have to be residential in purpose and use and be in a rural area. And generally, that's towns and cities in the U.S. that's less than 35,000 in population. And again, another statistic is that more than 90%, I think it's around 92% of the U.S. landmass is in a eligible area for USDA rural development.
And just for our audience, we are located on the east coast of Florida, and I just did a random zip code search throughout our region, heading over into central Florida, over towards the west coast, and I found very few zip codes that did not have areas that qualified for this. So I think an area that did not qualify was on one of the barrier islands, and it was full of condos. So I was like, well, yeah, that sort of figures, but it's pretty amazing. And I encourage everybody to look into this. From the vantage point of available funds, is this a program that is going to be indefinite, or is there some urgency to, if you're interested, check it out?
Well, no, there's not really any urgency to it because it's available year round. So, we get our funds at the first of each fiscal year, starting in October 1st. And typically we get enough funds that last through the whole fiscal year. So funds are available year round, typically. Okay.
Now, what about, it's not necessarily for first-time buyers, right, which I noted in there. So you're eligible if you meet the eligibility requirements. You don't have to be a first-time buyer.
Correct. People can have owned a home in the past or very recently. You don't have to meet any first-time home buyer requirements. Typically, we say that it's only to provide our applicants, a residence, one residence. There are some exceptions. If they get moved on their job and can show repayment for both houses, they might be able to retain another house. But yeah, this is for owner-occupied principal residence. It's no financing of second homes or anything like that.
Now, how long do they have to live in the house? Because I could probably see that somebody would go, wow, that's a great opportunity to get in on something at a great price. Market changes and I can, move on up.
Right. USDA does not specify any time of any time frame, minimum time frame that they have to be in the house before they sell. So it's open-ended there. Wow.
So I think that with the state of the market today, that's probably another big selling point. Right. The point of getting this all done in advance, how attractive should that be to a builder, for example?
Yes. So builders, the advantage for the single close construction loan for the builders is that, the loan funds are going to be drawn down for construction draws. So it's actually on the applicant's dime and not on the builder's dime to build the house. So they don't have to use their lines of credit or any of their, assets or finances. So it's going to be drawn down from loan funds. And so
they don't have to put their money up front.
Exactly. And it'll be the typical inspections that they have from the county or city. Yeah.
From let's take a look at the financial institutions who want to get in on this. You're not competing with them. You're offering them something that they may not have in their portfolio.
Absolutely. That's a great way to expand their client base, offering the no down payment program. And they get that government backing on this construction loan up front before construction even begins, which mitigates a lot of the inherent risk in a construction project. So heaven help us if the loan failed during construction, but if that did, we would ask the lender to finish the house, try to market it and sell it. And if they experience a loss, even after doing all that, then USDA stands ready, willing, and able to make good on that government guarantee.
Just based on the screening criteria, though, I would imagine if that even happens, it's a very, very small percentage.
I don't know that it has happened. Yeah.
Awesome. What would you say is the single most attractive, if we look at builder, lender, realtor, what is the most single thing that they're all going to have this aha moment about?
Just attracting more clients with a no down payment program. So in my world, probably the two biggest hurdles that keep people from buying a house and or building a house would be the lack of funds for down payment from conventional loan. This addresses that, and credit issues, having credit problems. So with our flexible credit underwriting, we think we address a lot of those issues as well.
What does the lender that have to do to qualify? We know what the buyer has to do, but what does the lender have to do to qualify then?
Yeah, great question. So for lenders to qualify to participate, they have to be USDA approved, which they go through the approval process. But once they are USDA approved, they only have to have 2 years experience in construction loans, managing and making construction loans. And the builders that they approve for this program also have to have 2 years experience in constructing single family housing residences.
And that was my next question for the builders. A number of people moving to Florida, I forget exactly how much it is. It's like in the thousands per month. This would seem to be something that should open up a lot of new areas of 35,000 people or less in the community. I would really think that this could be a huge opportunity for people moving to the Sunshine State.
Absolutely. I agree.
Yep. When you get into this, walk me through the process. How does it operate? Let's say I find a piece of property, and I guess a good question to ask on the property, is there a limit to the size of the property? I know in some of the rural areas I was looking at, it was rural areas starting with an acre. Some of them were 5 acres. What about the size of the property?
Great question. USDA does not limit the size of the property. It just has to be typical for the area for residential uses. So if a county is typical, to have 3 or 4 acres as a home site, or even 5 or 6 acres, that's what we go with. The appraiser basically identifies what is typical for that area.
And I think that's a great way to look at it, because I know without naming the county, in one of our adjoining counties, it is very rural. There's a lot of ranching going on, and those ranchers, as they sell off property, they don't sell them off in little drips and at all. They sell maybe a 10 or 20 acre plot and go from there. So it would technically qualify if the person qualifies.
If the appraiser said that was typical for the area, that's right. Yeah.
How long does the entire back to the property itself? The property itself, the loan covers the purchase of the property, building of the house, even down to landscaping.
Oh, absolutely, absolutely. Basically, the only thing, everything associated with building a house, as far as building the dwelling itself, the septic tank if required, the well if required, driveways, landscaping. We don't allow financing of movable items such as furniture, that type of thing. Typical appliances such as washers and dryers, maybe refrigerators, built-in ovens, built-in microwaves. Obviously, those would be, but that's about where it's limited.
Okay. How long does the process take?
Good question. So once a lender, so from the applicant standpoint, when an applicant applies with a lender, then the lender does their typical originating processes, underwriting processes. So once they get ready to request a government guarantee of USDA, they send us the loan package. Then we take typically 2 business days to do our review and give our blessing or require more information to the lender. So from the applicant standpoint, it takes about 2 more business days than what it would without USDA's involvement. But what are you getting for those 2 days? You're getting no down payment and all the bells and whistles that we've mentioned. So,
but that's still incredibly streamlined when you stop and think about what happens in a normal home buying situation. That's just, it's a little mind boggling, to be quite honest, that it could happen that quickly.
We've spent many years trying to fine tune the process. So I think
how many people have taken advantage of this program? Just any general statistics?
Oh, wow. So every year we get funding of around $24 billion nationwide. So we came close a couple of years ago of spending the whole $24 billion. So number wise on applicants, it's in the tens of thousands per year. So it's gaining in popularity. A lot of people don't know about it, like you said earlier.
We're going to do our part to make sure that they do know about it. Question from a builder's vantage point, because this is something that I hear when I'm sitting in on board meetings, and that is the price of construction materials. From the time a project starts until the time a project ends, construction materials historically, they may be changing now, but historically in the last couple of years have gone through the roof. No pun intended. How is that addressed?
Yes, so there are contingency reserves. So for increased costs or increased project scope. So we do have a contingency reserve of up to 10% that can even be rolled into the loan. So all of our loan closing costs can go up to 100% of the appraised value. So whatever cost can be rolled into that loan up to that appraised value, it is eligible or are eligible loan purposes, including that 10% contingency reserve. So if their cost overruns, they can pull out of that contingency reserve.
Yeah, I want my builder friends to not go, oh, change order. So it's not that, that's not something that we're talking about here. We're talking about actual cost.
Exactly.
Yeah. Earlier, we mentioned how people could get more information. And before we wrap up the program today, again, how can they reach out both from the consumer standpoint, then the lender, builder, realtor?
Good questions. So our URL is kind of long, so I chose not to try to read it off. But if folks will go to www.rd.usda.gov and it's /programs-services. So that'll take you to our website, and then click on single family housing programs on the left menu. And there you'll see all of our housing programs, our direct loans I mentioned earlier, which are subsidized loans, repair loans and grants for homeowners that are in need of repairs. We have grants available up to $10,000 for elderly households to remove health and safety hazards. So, but our program for the single family housing guaranteed loan program is there as well. And there are tabs at the top for overview, to apply. That's where the list of USDA approved lenders is under the to apply tab. And we also have a separate list of lenders that are participating in the single close construction loan feature as well. And so, like I said, if interested, the applicants themselves should probably contact the USDA approved lender of their choice and, get all their questions answered there. Be sure to ask for somebody, for the person who is familiar with USDA, because some lenders, even though they offer our program, not everybody within that lender might know the details of our program.
And I think that's important, because I was chatting with someone who is in the mortgage industry just a few days ago, and asked, are there qualified areas in our particular county? And this person, without identifying who it is, or male or female, said, "Oh no." And I was like, "Really? Let me show you." And pulled it up, and they were quite amazed. And it was simply because they were not familiar with the program. And in some respect, I think they equated it to low income housing, and that's not the case at all. So it depends on being familiar with the program too, as a lender.
Absolutely. The direct program has been around for 50, 60 years. So sometimes in some areas, that's the only program people are aware of. So yes, all right. Good job there, Sam.
Yeah, I'm advocating for it because I believe in it. Along that same line, if there are qualified areas that in zip codes, they do not have to necessarily be in an rural area only. It can be within a village or within a city limit as long as it meets the requirements.
That's right. Yes. So by rural, it doesn't necessarily mean a scattered site with no development around them. We do many houses within a subdivision, and the subdivision is located within a rural area. Yes, that's a good question.
Yep. I wanted to make sure I underscored that because that seems to be a growing area for our residents here in particular. Ed, is there anything that we did not touch upon that our audience needs to know about?
Gosh, I could probably go on for days, but I think we covered most of the highlights of the program. So, excited to get more people involved. I tell you one thing, Sam, I did do a podcast the other day where the host said she was located in a rural area, thought she may qualify. She was going to go get her loan. And I said, well, listen to this. Back in 1994, 3 years after the guaranteed program started, I was going around marketing the program and going home to my little rental unit thinking, we've always wanted to buy a house, but I don't know. We just didn't have the down payment. And I thought, I've got good credit. I've got, stable income. I wonder if I could qualify. And long story short, we built our very first house under the USDA Rural Development Program. Back then, we didn't have the single close feature. I wish we had. It'd have saved me some money. But so I'm a living, breathing example of the success of that program. We closed on it. A few years later, we're able to refinance into the conventional world. So that kind of was able to get us our start, kind of our foothold, and kind of moved us along and gave somebody else the chance to get started. So
that's a great way of describing it. And I have to be honest. I have thought of looking into it. We just recently purchased a house, so it's like, wow, I wish I'd have known about this, 2 years ago, for example. But sometimes you learn from the things that you do. So, Ed, absolutely. I want to thank you again for being here on the program. One question for you, it is that it's a very simple question. Okay. Would you be able to come back at some point in the future as there are new developments to the program, or as we get into a new fiscal year, to come back and recap some of these things, because I think they bear repeating?
Absolutely, Sam. Would love to be able to do so.
All right. Ladies and gentlemen, my guest today, Ed Peace, and I'm going to read out his title because it is an impressive title. Finance and Loan Analyst, Lender and Partner Activities Branch out of the D.C. area, but I have to tell you, he's not in D.C. Single Family Housing Guaranteed Loan Programs, Rural Development, but as we heard, this is not limited to just rural areas, with the U.S. Department of Agriculture. And that is a mouthful, but it is certainly something that I want you all to remember so that you can reach out when you need help, because it's a great program.
We think so. Thank you, Sam.
Thanks for being here. Have a great day, everybody, and we'll update you on this as there are new developments. The Florida Business Forum is dedicated to showcasing Florida businesses and CEOs of all sorts to promote their business or not-for-profit in the only business forum of its type in Florida. Thanks for tuning in, and remember, the Florida Business Forum is now accepting guest applications. Have a great day, everyone, and stay tuned for more business.